With us here on Trading Hour, the market's down 16 points, so there is a little bit of recovery, which we are seeing. I mean, actually, the pickup is pretty stark. And we've got the Bank Nifty, which is up about 0.1% as well. And we're almost at the day's high on the Nifty Bank at this point in time. And I think the mid-cap and small-cap part of the market is flat. I mean, there is nothing, there's no cut or anything. Small-cap index actually has now come back into the green, but they're off the highs. So let's see if this pickup endures, continues. Ashwini is with us to tell us what he's making of things right now. Ashwini, thanks very much. Morning. What's your reading and what would you do?
See, my sense is that the shorts are trapped at 11,000, 11,020 thereabouts. And chances are you will close at the highs of the day, both in terms of Nifty as well as Bank Nifty. So if you are short since morning, etc., please cut them. Get on the long side, because today was the first sort of day where it looked like maybe shorts may get follow through, and that way you'll possibly have a lot of shorts right now in the system. What's hearty is that Asia, Europe, etc. were down, and we couldn't come off even 30-40 points. So chances are that Friday, you'll go back home with some gains. Having said that, individual stocks, Titan is a buy with a stop of 1040, target of 1100. ICICI Pru is a buy with a stop of 334, target of 348. And Muthoot Finance is a buy with a stop of 570, target of 1595. Now the issue here is 11,000 stronger or is 11,140 stronger? My view is that 11,000 is stronger because it's held on for last 4 months. So each time we go there, the idea should be to buy into the Nifty as well as Bank Nifty.
Is your position, Ashwini, further corroborated with the fact that, Asia is down significantly, but we've managed to recover today?
I think we need to stop following Asia, because when Asia goes up, we don't go up. And now Asia is correcting, but we are going up. So there may not be, one-to-one correlation, because China, US is a much bigger issue than India, US, or, we didn't really fall because of this Asian crisis. So my sense is we are, playing our own tune. And chances are that we are in an outperforming phase at the moment.
Ashwini, ICICI Pru Life, I mean, if you can look at the chart, is there a breakout? I mean, if you look at the price point right from May of 2018 and all the touch points down and draw a downward sloping trend line, we seem to have broken out over the last 2 days.
See, that incidentally is one of the calls. Now the 200-day moving average is 350. My sense is that there is a lot of accumulation going on in this stock, and once we can trade above 350, chances are it will go up even further. Its high was 505. It's been making higher lows. So my sense is that, again, a lot of these stocks are bottoming out and tending to move higher. The news may come in later, but for the moment it's failing to make fresh highs, fresh lows, sorry.
Okay. All right, Ashwini, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Ashwini Gujral talking about the markets, which have in fact recovered significantly. Mentioned that the Bank Nifty is going to probably break into the green soon enough, and that's exactly what's taken place. And the advanced decline ratio should come up for you as well. There has been a little bit of an improvement which has come in for the advanced decline ratio. That graph should come up as well. Amit Dalal of Tata Investment Corporation joins in to discuss the fundamentals of the market this Friday now. Amit, hi. Thank you very much for taking the time out. Clearly the markets have recovered. The mid-cap index is seeing some amount of fervor. Do you think that the markets in general are out of the woods? Good time to buy broader market stocks now?
So I think after the last fortnights of events which have taken place, and the leadership shown by the government. The market has definitely moved from a period of profound uncertainty which was there from September till late February. And now there is a feeling that both in terms of the financial system and in terms of politics, the market has a period ahead of itself which it can discount with less risk and more opportunity for investment. Also in the last 3 or 4 months, there has been a huge correction in the small and mid caps, which has given an opportunity and a window of allocation that can take place both by the retail market and by mutual funds and institutions. The market on the whole is perhaps not much higher than it was on 31st December, but definitely it's on a more sound and a more confident wicket right now.
When you say politics and you said decisive moves shown by the government, you mean the events of the last couple of weeks put the NDA ahead as far as the general elections are concerned. Is that your contention, Amit?
I believe that on the ground, there is a general expectation that if you took the total numbers which were being talked about as winning by any single party, I think that number has perhaps enhanced itself substantially. And therefore, I think without naming any one party, I would think that having a very strong government is a very big plus for the equity markets. And having a fractious government would be a very big weakness for the equity markets. So if things remain and circumstances remain the way they are being talked about right now, we could very well get a government which is in a majority, and a government which would perhaps be able to lead the country with strength. And that's what I think the market has discounted in the last few days of the rally upwards.
So which are the sectors that you're liking ahead of the election outcome, Amit?
So I'm going to extend myself out and say that after a long time, I think this year we will see the Nifty in composite give us an earnings growth higher than what we have seen in the last 3 or 4 years. Frankly, I'm quite positive that that should happen because the biggest contribution to this growth is going to come from, according to Bloomberg estimates of all the Nifty companies, from the private sector banks and perhaps even State Bank of India. And those were big laggards in the contribution of earnings degrowth in 18-19. Now, if we are lucky and the system starts behaving in a better manner and GNPs don't go up, I think markets will look at that with tremendous confidence in 1920. So I remain positive on the market based on that single premise. And the P ratio now is, or the PEG ratio for the Nifty is now the lowest it has been for the last 3 years.
Sure. Just a more near-term question, Amit. Do you think the gains that the broader market has put on will stay and will extend these gains into the elections? Essentially a pre-election rally, a proper one. Will we get one, or it's possible that we see recent, the market goes back to recent lows? As you know, a week is a long time in politics, as they say, and something or the other will keep hitting the market, hitting the tape in terms of news flow. What's your sense there?
Barring any major negative event in India or worldwide, I don't think the markets will now come down to substantial level. Frankly, surprisingly, if you take the January low, it was not much lower than 31st December also. And I think the markets will perhaps, it's the mid cap and small cap which had rutted itself into a very bad situation of no liquidity, very low prices, and completely no buyers on the screen. That is changing, and I think that will continue to change. So if you ask me, will we have this going on for another couple of months? I feel pretty confident we will. I do think that in the next couple of months, the index will perhaps remain range bound. You may get another leg up of 500-600 points on the Sensex from here, but I don't think we'll cross previous highs. And you will always find some profit taking place. So it will remain range bound where the Nifty is concerned. But I think the small and mid caps confidence which has come will continue for another couple of months, definitely.
So you're actually sounding quite positive. I mean, the most positive that I've heard you for the last couple of years, Amit. But just one last quick question. Why are local investors selling? I'm talking about mutual funds, etc. What's going on there? What's the story? I mean, they surely know more about politics on the ground, etc., right? I mean, that as what you outlined. So why is there constant selling from the local guys?
So I'm not very sure mutual funds are selling. You would perhaps be referring to the DII figure.
Yeah.
And the DII figure is always, if you take a lot of participation from insurance companies also. And life insurance behaves contrarian as an equity investor. It buys when FIIs are selling, and as you know, for the last 6 months, FIIs were selling, and now they have been buying. So I think LIC does a fantastic job of being contrarian and with tremendous, I would say, guts. And they as we know from the annual report, they book substantial gains from this activity every year. So I think it could be more of an insurance divestment taking place rather than mutual fund. I'm not sure if it's basically mutual fund flows. I haven't studied that. I'm sorry.
Okay, all right, Amit, we're going to leave it on that note. Pleasure speaking with you. Thanks very much for joining in and speaking with us.